Welcome to this video presentation, How to Avoid Getting Burned in the Markets, presented by FFR Trading. In this series, we'll equip you with practical trading and investing knowledge while helping you to avoid the many pitfalls and mistakes many traders and investors make. In this week's video, we'll discuss real-life scenarios. But first, let me introduce you to who we are here at FFR Trading and what our role is. FFR Trading is a due diligence firm for various investment and trading services. We've worked with dozens of traders in all markets, including stocks, options, futures, and Forex. In a nutshell, we've uncovered the mistakes so many people make when considering trading or investing strategies. Our goal is to find solid investment and trading opportunities that we can pass along to you. We hope that this video can help you avoid some of the same pitfalls many investors fall into and help provide a primer on the markets, though not a comprehensive thesis on the subject. For advanced education on the markets, we'll discuss the unlimited literature available on specific topics. Chapter 14. Real-Life Scenarios. Congratulations on making it this far. You've completed a crash course in how to avoid getting burned in the markets. Now it's time to test what you've learned. Let's take a look at these scenarios. Scenario number 1. It's 11:50 p.m. on November 8th, 2016, and in a surprising turn of events, Donald Trump has just been elected President of the United States. After years of economic recovery, the market futures have begun to plummet, and there's a small panic brewing on Wall Street. Do you A, hold, B, sell, C, call your financial advisor? Well, following the dramatic downturn once the stock market opened, Wall Street righted the ship and the Dow had a record-breaking day. If you held on to your stocks, then you made money. However, if you sold them, then you gave in to the panic and most likely lost money. The safest decision in this case is to call your financial advisor and get his or her expert opinion, since it's hopefully not his or her first time experiencing a situation like this. Scenario number 2. You've been trying to invest independently, but every time you buy stock in a company, it goes down. You're not sure what you're doing wrong, but it's getting disheartening, and you're not confident in your decisions anymore. Investments work for millions of people and are a recommended strategy for retirement, but you're not so sure anymore. Should you A, sell all of your stocks and start saving with cash and bonds? B, keep investing on your own, trusting that you'll gain confidence and it will work out eventually? Or C, consult a financial professional? The answer? Well, the markets are never a sure thing, so it's possible you've had a bad run of luck. However, if that's making you second guess whether you'll make it in the markets, then it may be time to consult a professional. The worst thing you can do is trust your cash savings to tide you over the rest of your life. This is subject to inflation and interest rates, and it's plausible that the $500 you have saved today may only be worth $300 20 years from now. Let a professional set you up with a low-risk portfolio so your money can grow, and it can grow slowly and steadily, taking the pressure off of you to invest wisely. Scenario number 3. You're 60 years old and getting ready to hit the age of retirement. The only problem is that you haven't been preparing for it. With the news about Social Security potentially running out, you're thinking it's time to start investing. You know that the fastest way to grow money is aggressively investing in the stock market, but that's also potentially the fastest way to lose your savings if you don't know what you're doing. Do you A, keep doing what you've been doing and hope for the best? B, take a leap of faith and start investing right away? Or C, talk to a professional who has made a career out of helping people like you? Well, the answer is, while you may be inclined to take options A and B, the best choice is to sit down and talk with a financial professional. Even if you've casually studied the stock market over your morning bowl of cereal, that doesn't make you an expert in the markets. Also, at 60 years old, time is not on your side when it comes to investing, so you'll want to know about some of the most conservative, reliable, and long-term products to help you maximize your investments. Scenario number 4. You're young, starting your career, and don't have much money to invest. However, you know that it's never too early to start thinking about your retirement, so you want to get involved with the markets. The main problem is you don't know how to get started. Do you A, sign up for the 401k plan at work? B, start using an investing app? Or C, talk to a broker? The answer, all are good strategies to start employing as you start to get more involved in the markets. Try to make contributions to your 401k that will maximize your employer match. If you still have money left over that you have earmarked for investments, test the waters with an app such as Robinhood or Acorns. This would also be a good time to go to your bank and ask them if they have any products for young, inexperienced investors like yourself. And finally, scenario number 5. You found a trading platform online and the reviews on the web page look great. However, when you Google search it, things don't look quite as sunny. It's not that the reviews are bad, there just don't seem to be many available to view. In fact, you can't find much information about the company at all. Should you trade with them? A, yes, because some good reviews are better than lots of bad ones. B, no, because you don't have enough testimonials for proper judgment. Or C, I need to do a little more digging. Well, the answer is if you found an easy-to-use trading platform online that charges a fee you're comfortable with, that's great. You should be wary of a company that only has vague, positive reviews on its website. Chances are that if a company really has a lot to offer you, it would have received some press and will show up online. Do a little more digging to make sure you feel comfortable with the site before you do business with them. The bottom line, unless you're able to assume a lot of personal financial risk and potential reward, then it's always best to talk to someone who is trained for the job. You can ask around the office to see if people have a financial advisor they trust, but don't always take their advice on when to buy and sell. Treat your money like you would anything else in your life and put it in the hands of experts if you don't trust yourself to make the most of it. In conclusion, know that there is still money to be made in the markets. Take it slow. Find strategies that match your unique personality. If possible, work with a trading team or at least one other person. They'll be able to see your blind spots when you can't. Above all, don't trade with money you can't afford to lose. At the end of the day, it's only money. Your family, friends, and your health matter most. Aim for a balanced life. If you aren't getting some enjoyment out of trading or investing, then chances are you might be in the wrong profession. Thanks for joining us. We hope this video has helped you on your journey to success in the markets. If you would like to obtain your own copy of our book, How to Avoid Getting Burned in the Markets, email us at support@ffrtrading.com.